G'day guys, John from Ruralco Water here with your weekly Southern Basin market update for Tuesday, the 26th of May. Well, again, over this last week, we've seen scattered showers and rain across the Southern Basin. It's really had a bit of a subduing effect on allocation prices as we head towards the end of season. Storage levels, as we tell you every week, storage levels continue to drop, but they have slowed a bit over the last few weeks with a little bit of inflow to match that outflow, particularly coming out of snowy hydro. Storage levels at the moment in the Murray are at 43% compared to 54% this same time last year. And anticipation of further rain events over the next few days and over the week to come have continued to subdue that allocation market. Current indicative allocation prices are as follows. Below the choke in SA and Vic, $380 to $390 a meg. Above the choke in Zone 6 and Zone 10, $300 to $310 a meg. In Goulburn, it's about $350 to $360 a meg. In the Murrumbidgee, it's around $360 a meg as well. And in New South Wales Murray, we've seen trades today down in that $320 to $330 mark, just as there's only a couple of 2.5 weeks left for allocation trade in New South Wales. So there's starting to be a bit of pressure from sellers to get rid of water they can't carry over. A reminder, as I just said, New South Wales trade will close on the 16th of June, and this does include Coleambally Irrigation Network and the other irrigation corps. And last week, MDBA advised that the opening trade balance for the Barmah choke would be approximately 24 gig. Now this is 14 gig less than last year, and it's expected that this space will be in high demand as users look to move water that they've either parked or having licenses above the choke down in the lower Murray region. An important reminder for those who use the Victorian Water Register, particularly the My Water website to keep track of your accounts. From the 2nd of June, you'll have to have two-factor authentication turned on. So follow the prompts on the website for that. The opening balance, as one of our lovely trucks goes past, the opening balance for the Goulburn IVT hasn't been announced yet, but we do expect that to be announced in the next couple of weeks. Risk of spill estimates at the moment in Goulburn are approximately at 10%, and in the Murray it remains at about 35% chance of spill into the new year. With that particularly low opening current risk in Goulburn, it'll be interesting to see how early in the season they make a low risk of spill declaration. Carryover capacity is in high demand at the moment. Supply remains tight in the lower Murray, particularly in Zone 11. If you're looking to buy space there, your pricing probably needs to be $80 to $90 a meg, just to try and attract some sellers to market for that space. And in Victoria, in Zone 7, particularly on low, again, high demand for that space, not a lot available on the market at the moment. And again, we're seeing that price firm up on what it has been over the last few weeks, just to try and attract sellers to market. Inquiry for forward allocations has dropped in the last week or so, just with that allocation pricing drop, with buyers looking to buy on the spot market now and find space at cheaper than what forward pricing is in the market. Finally, in the perm market, we've seen some pretty steady trade in that space. Special note over the last week has been Vic 6 high reliability above the choke. We've seen strong buyer activity there with prices hitting the $4,600 a meg, which is higher than it has been for a while. And there is still steady demand across all the other zones. Thanks for watching. Have a great week.